Hi everyone, it's Andrew here. So it's time for another portfolio update, and I've got some new buys and a few sells, so it'll be hopefully kind of interesting to see. There's been a lot happening in July, August, September, so we'll get into that in a moment. But the reason I do any of this is because I just think that having this transparency, it opens me up to criticism, but I think it's the right thing to do if I'm putting my messages and my face out there into the YouTube land. There's a lot of pretty bad stuff out in the YouTube world. Just go look at something like, I don't know, CoffeeZilla's amazing YouTube channel where he pulls apart all the crap that there is online. So I'm trying to show some transparency. I hope that helps you learn a little bit more about me and about what I'm trying to do here, and hopefully we can all learn together. So let's jump into my portfolio. All right, so it has been another rough quarter, as I'm sure we're all very aware of. As you can see in the right-hand column there, I've got the percentage change on Q2. So some things have been down pretty dramatically. So Redbubble, Alibaba, Trueleaf, they're all down like 25% or so. Some things have gone up actually for the quarter, 25% up for KPG, 15% for Judgement. Yeah, I got a few, and let's talk about the sales now. So I've sold my Shinoken stake because they're going private. Anyone else who's been following Shinoken would be aware of that. So what's happening is they're going to buy all the shares outstanding for around 1,600 yen per share. It's the price at the moment is like 15.95, 94, something like that. So instead of sitting around waiting for them for the extra 4 yen, the extra 6 yen, I just thought I would sell them now because the thesis has changed, because essentially this is not a long-term investment anymore because it's going private and I won't be able to have my shares anyway, so it's not going to compound. So I just thought I'd sell and move that money somewhere else. And while I was doing that, some Asos came out with some news back in June, I think. A new CEO was announced. That'd been coming for about 10 months now. So with the new CEO that's come in for Asos, unfortunately he wants to make more profit for the business. I know that seems like actually a good thing and they want to make more money, but I think it actually goes away from the idea of this scaled economy shared idea, and that was sort of the thesis for the long term. That gives them that competitive advantage, and essentially they're going to scrap that away and they're going to try to chase a more profitable business with better margins and things like that. And I just think that just turns them into everybody else, and I don't really want that. I don't want a business just like everybody else, because then it becomes a game of marketing spend maybe, or it becomes a game of like trends and getting, I don't know. And honestly, I just didn't feel comfortable. I didn't feel comfortable with the new CEO. It was a mistake of mine to invest in this business because they didn't have a CEO when I invested. I just assumed they would have continued on this idea of scaled economy shared, but they're not. So I had to let them go and I had to take the loss, and that was a lesson that I've learned. And I really shouldn't have invested before they'd gotten a new CEO. That's what I shouldn't have done. I should have waited until I was clear on who was the leader of this team, because that's the management piece of my investing anyway. I really want to make sure the people I'm investing with are great people, and I essentially was going in blind. I just thought the culture of the business was going to stay the same, and it hasn't. It's changed, and that's why I'm out. Now, I actually sold out, not at $5.60. I think that's where the price is today. I sold out about $10, I think. And yeah, it's just complete luck that it's dropped a lot further, and I could have lost a lot more money, but look, I still lost money on that investment, and it was a very small part of my portfolio anyway. But this is a good lesson, I think, in keeping up to date with the business, and when the thesis changes to what you originally invested in, and when the thesis has changed, that's okay to sell. That's the time to sell. I'm trying to find investments that the thesis shouldn't change for a long period of time, and that's sort of where I'll go to now with my new investments. So SDI Group, Teqnion, and Terravest are my 3 new investments for the quarter. Essentially, it was the Shinoken Asos money has just gone into those new companies. So that's in a little bit of extra money that I put in. So SDI Group, great business. I think they have a long runway. These are all serial acquirer kind of businesses, and I've been doing a lot of work into that world in the last 3, maybe 6 months. So I'm starting to really get my head around these serial acquirer ideas, and I think these companies are the ones doing it the best. And they sit well with me from a philosophy point of view, like an investing philosophy point of view. I talk to all the CEOs of these companies, and that's pretty cool. So SDI Group, Teqnion, and Terravest. I don't know whether I have videos out on any of those yet. I've got interviews with SDI Group and Teqnion. I don't have full deep analysis on why I've invested in these and what price I think they're good value at and things like that. I will get them coming soon at some point. I have done the work on those, I just haven't put a video together, that's all. Now, if you are new here to the channel, if you're interested in the brokerage account that I'm using, I use Interactive Brokers, and I think they're the best, I think they're the safest. You don't want to use things like Robinhood and things like that. The reason is because they haven't been around for very long, and there's issues with management and things like that. Interactive Brokers are rock solid, and they're a publicly listed company, so you can actually look at their financial statements as well. So it gives me a lot of comfort knowing that my money is very safe with that brokerage account. In my description, there's lots of other things in there. Take a read and see what's interesting for you. It's all about the investing things, and I've got my e-magazine in there. I've got a money managers game in there. I've got my Twitter link in there, things like that. So take a look. Now let's have a look at my overall return since I've started tracking my portfolio back in the start of 2020. So that was pre-pandemic. Then it got crushed, and then it rose up again, and then it's been crushed again, and it's been a bit of a roller coaster, and I think that's all okay. The big one there is Redbubble. That's down 81%. That's pretty nuts. But that's okay. I'll have videos coming out soon about Redbubble, and I've reanalyzed it, and you can see my thoughts on that. But essentially, I don't really need to sell. I'm okay with that one. Alibaba, similar. It's down a lot. Yeah. And everything else is all good so far. Asos and Shinoken obviously are going to be gone from this list, so that'll be updated for the next quarter. And yeah, you can see how things have been going so far since I bought them. The company that I've had the longest now, I think, is Skyworks, and they're now down. So at one point they were up about 100%, and now they're negative. So look, it's a wild ride, this whole investing world, and that's okay. You've got to keep going for the long term here, and that's my philosophy. So really understanding the companies has really helped me be really calm about all this. And the S&P has returned since in that period of time. It's actually up 12% since I started tracking, so I would have been far better off investing in the index. I would be up 12% rather than down 30%, but let's see in a few more years' time how this goes. My plan is actually I don't have a pie chart for you today, but essentially naspers, prosus, Alibaba make up about half of my portfolio, and everything else is sort of the rest. My plan is to actually narrow this list down to sort of somewhere between maybe 8-10 companies in total. That would be sort of where I'm aiming for. I think I'll get there over the next sort of 2 to 3 years. Things like Alibaba, I might actually sell when it reaches fair value. Naspers, prosus, maybe something similar. I'll think about those ones a little bit because the underlying asset in Tencent's really strong. So I'll think. But all of these things, it's going to continue to change until I feel like I've learnt what I need to learn, and I'm going to be growing as I keep making these videos, and there is going to still be some changes, and then hopefully I can turn into someone like Guy Spear, who doesn't make any changes whatsoever, and that will be the goal of my future portfolio, is to make 0 changes. So not there yet. I think I'm going to get there in the next couple of years, and that's what I'm working towards. All right, so anyway, there's some commentary on my portfolio. There's the latest results on those as well. Criticism is greatly appreciated, and on any of these investments, happy to discuss them with you at all. Probably best to go over into Discord. In the link in the description where the Money Managers game is, if you go into Discord, I'm a little bit more active on there than anywhere else. Like I read comments, but I can't get to them all. But Discord is a little bit more personal, so I can talk about a specific investment there if you're interested. So yeah, I hope you enjoyed this transparency. I hope you enjoyed these types of videos. I'll have another one out in early January, and I will see you next week.